By the end of this video you'll have 5 powerhouse companies that could anchor your portfolio for years. We're talking about building real, long-term wealth. Forget meme stocks, today we're diving into the bedrock of the market. We'll cover a global sportswear giant, a social media pioneer, a semiconductor leader, a legacy tech titan reinvented for AI, and a retail behemoth that sells everything to everyone. These companies don't just follow trends, they create them. If you're serious about your financial future, you're in the right place. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Let's kick things off with Nike, ticker NKE, the undisputed champion of sportswear and a brand that's become synonymous with athletic excellence and cultural influence. Nike is more than just shoes and apparel. It's a symbol of ambition, performance, and innovation, inspiring millions to push their limits every single day. Nike is a global icon, seamlessly woven into the fabric of sports, fashion, and everyday culture. Whether you're an elite athlete or just love street style, Nike's influence is everywhere. That swoosh is instantly recognized from New York to Nairobi, from Tokyo to Cape Town. It's a universal symbol of aspiration and achievement. Their brand moat is nearly impossible to cross. Decades of relentless marketing, innovation, and athlete partnerships have built a fortress around Nike's reputation. When you buy Jordans, you're not just getting a pair of shoes. You're buying a piece of sports history, a cultural phenomenon that transcends generations. Nike's reach is truly global, with a presence in nearly every country. This scale provides stability, resilience, and the ability to grow across diverse markets, no matter the economic climate. What excites me most about Nike's future? Their digital transformation, which is reshaping how they connect with customers and deliver value. Nike's direct-to-consumer business, especially through the SNKRS app, is a masterclass in building hype, creating exclusivity, and owning the customer relationship from start to finish. By cutting out the middleman, Nike not only boosts its profit margins, but also collects invaluable data. This data powers personalized marketing, smarter product launches, and razor-sharp inventory management. Nike is rapidly evolving into a tech and data company, not just a shoe company. Their investments in digital platforms and smart products are setting new industry standards. Innovation is at their core. Think fly-knit materials, self-lacing shoes, and sustainable manufacturing. Nike is always at the forefront of what's next in sportswear. They're always pushing boundaries, launching new products that keep the brand fresh and demand sky high. Every release is an event, drawing crowds and headlines. Their marketing is legendary. Nike doesn't just sponsor athletes, they create icons, telling stories that inspire and resonate worldwide. Michael Jordan, LeBron James, Tiger Woods, these aren't just endorsements, they're partnerships that have become part of Nike's DNA and global legacy. Financially, Nike delivers year after year. They've weathered fierce competition, shifting trends and global economic cycles, proving their resilience and adaptability. The recent pullback in stock price offers a rare buying opportunity for long-term investors who believe in the brand's enduring power. Looking ahead, Nike's digital strategy and relentless global expansion set them up for continued success, no matter how the world changes. This isn't a speculative play, it's a foundational holding for any serious portfolio, offering both stability and growth potential. With Nike, you get the stability of a blue-chip stock, plus the upside of digital innovation and international growth. Nike is a stock you can buy, hold, and feel confident about for years to come, whether you're investing for yourself or for the next generation. That's why Nike tops my list as the ultimate champion in sportswear, and a cornerstone for any investor looking for long-term winners. Next up is Reddit, ticker RDDT, a recent IPO that's been making waves on Wall Street and in tech circles alike. While it may be new to the public markets, Reddit is anything but new to the internet itself. In fact, Reddit has been a cornerstone of internet culture for nearly 2 decades, evolving from a scrappy startup into a digital giant that's shaped how millions of people connect, share, and discover information online. Often called the front page of the internet, Reddit is a sprawling network of communities, known as subreddits, dedicated to every interest imaginable. Whether you're into obscure hobbies, breaking news, or the latest memes, there's a place for you. Unlike other social platforms that revolve around influencers or personal brands, Reddit is built around topics and shared passions. This structure fosters passionate, highly engaged users who care deeply about their communities and the content they create. The big question, for investors and analysts, is how does Reddit turn all this engagement into profit? For years, Reddit prioritized user growth and community health over monetization, but that's starting to shift as the company matures. Advertising is the most obvious path forward. With subreddits organized by interest, advertisers can target users with incredible precision. Think fishing gear in R fishing, or tech gadgets in R technology. This level of targeting is a marketer's dream, and Reddit is just beginning to tap into this potential. But there's another, potentially even bigger opportunity: data licensing. Reddit's vast archive of conversations, opinions, and debates is a goldmine for companies training artificial intelligence models. Recent deals like the one with Google are just the tip of the iceberg. Expect more partnerships as the AI boom accelerates. As demand for high-quality, real-world data grows, Reddit's unique content becomes even more valuable. Data licensing could become a high-margin, recurring revenue stream, giving Reddit a powerful edge over competitors who lack this depth of user-generated content. And Reddit isn't stopping there. E-commerce and user-driven economy features are on the horizon. Imagine buying niche products directly within your favorite subreddit, or tipping insightful users with digital coins. These experiments could unlock entirely new revenue streams and make the platform even stickier for users. Of course, there are risks. Monetization must be handled delicately. Redditors are fiercely protective of their communities and value authenticity and privacy. Push too hard with ads or data deals, and the backlash could be swift and severe. Alienating the core user base is a real danger. Management needs to balance growth and profit with the trust and loyalty that have made Reddit special. Every decision will be scrutinized by a vocal, passionate community. Competition is fierce. Giants like TikTok, Instagram, and YouTube are all vying for attention. But Reddit's unique structure, where loyalty is to subreddits rather than the platform itself, gives it a resilience that's hard to replicate. People form real bonds in these communities. Moving an entire community off Reddit is no small feat. The platform's stickiness comes from these deep connections and the sense of belonging users feel, something that's tough for competitors to disrupt. Reddit now stands at a pivotal inflection point. With a massive, engaged user base and multiple monetization avenues just beginning to open up, the company is poised for a new era of growth, if it can execute. If management can strike the right balance between innovation and community trust, Reddit could become one of the most compelling growth stories in tech, potentially a multi-bagger for investors willing to bet on its future. For our third pick, we shift to the backbone of the digital world, Intel, ticker INTC. Intel's had a rough patch: competition, manufacturing stumbles, and a beaten-down stock, but that's where opportunity lies. Intel was the king of semiconductors, powering the PC revolution. Their expertise and scale remain unmatched. The turnaround? It's all about CEO Pat Gelsinger and Intel's new foundry strategy. Gelsinger's vision opened Intel's advanced fabs to other chip designers, competing with TSMC and Samsung. Why does this matter? The world needs more semiconductors and governments want domestic supply. Intel is the US leader, building new fabs with government support. If Intel catches up to TSMC technologically, the upside is massive. They'd be one of the few making the world's most advanced chips. Their core business, PCs and data centers, remains strong, and they're fighting back against AMD with new products. AI is the next frontier. While Nvidia leads now, Intel is investing in its own AI accelerators and is well positioned for the coming wave of AI PCs. Risks: execution is everything. The roadmap is ambitious, and the foundry business is fiercely competitive, but the reward justifies the risk. Intel is a strategically vital American company, trading at pessimistic valuations. If Gelsinger delivers, Intel could be one of the most important tech companies of the next decade. For patient, long-term investors, Intel is a compelling turnaround bet. Our fourth company is International Business Machines, ticker IBM, a tech legend that's reinvented itself for the modern era. Forget the mainframes and old-school image. Today's IBM is all about hybrid cloud and artificial intelligence. The game changer? Acquiring Red Hat, a leader in open source and hybrid cloud tech. This move turbocharged IBM's transformation. Hybrid cloud is the future. Companies need flexible solutions across private and public clouds. IBM, through Red Hat, is the Switzerland of the cloud wars, enabling everything to work together. This generates high-margin recurring revenue from software and consulting. On the AI front, IBM's watsonx platform brings decades of expertise to enterprise AI, helping businesses deploy secure, industry-specific solutions. Regulated industries like banking and healthcare need enterprise-grade AI, and IBM is uniquely positioned to deliver. IBM's stability is a plus: mature, profitable, and a strong dividend payer. That dividend provides income and downside protection while you wait for growth. The company has streamlined operations, spinning off slower growth businesses to focus on high growth areas. The challenge? Prove they can deliver consistent revenue growth. The market is skeptical, but that creates opportunity. As IBM posts solid results from software and AI, expect the market to re-rate the stock. With IBM, you get exposure to cloud and AI growth, blue chip stability, and a solid dividend. a compelling package for long-term investors. Our final stock is Walmart, ticker WMT, the undisputed heavyweight of retail. For decades, Walmart has been a household name, shaping the way Americans shop and setting the standard for value and convenience. It's a company that's not just survived, but thrived, through every economic cycle and retail revolution. Walmart's scale is unmatched. As the world's largest retailer, they have incredible bargaining power, driving prices lower and attracting more customers. With over 10,500 stores worldwide and millions of employees, Walmart's reach is truly global, touching communities in nearly every corner of the United States and far beyond. Their moat is nearly impossible to replicate. The sheer size of their operations, their supply chain efficiency, and their ability to negotiate with suppliers give them a competitive edge that few can challenge. The big fear was Amazon and e-commerce, but Walmart didn't roll over. They invested billions in their own e-commerce and logistics, and it's paying off. Instead of being left behind, Walmart has become a formidable digital competitor, using its resources to innovate and adapt. Walmart is now a top e-commerce player, leveraging over 4,600 U.S. stores as fulfillment centers for online orders. This network allows them to offer fast shipping and convenient pickup options that rival even the biggest online retailers. This omni-channel strategy, blending physical and digital, is the future of retail, and Walmart is leading the way. Customers can shop however they want, in-store, online, or a seamless mix of both, making Walmart a one-stop shop for modern consumers. They've turned their stores into assets, enabling curbside pickup and same-day delivery at scale. This flexibility has been a game-changer, especially during the pandemic, when convenience and safety became top priorities for shoppers. Beyond retail, Walmart is building new, higher-margin businesses. From healthcare to financial services, they're expanding their ecosystem to serve more of their customers' needs under one roof. Walmart Connect, their advertising arm, lets brands reach shoppers at the point of purchase, online and in-store. This is a fast-growing, high-margin business that leverages Walmart's massive customer base and data insights. They're also expanding into healthcare with Walmart Health, offering affordable care and tapping into a massive market. By providing services like primary care, dental, and vision, Walmart is positioning itself as a trusted provider for millions of Americans. These moves show Walmart is more than a retailer. It's a diversified ecosystem. The company is building a platform that touches nearly every aspect of daily life, from groceries and medicine to banking and digital advertising. During economic uncertainty, Walmart shines. Consumers trade down, and Walmart gains market share, making it a defensive holding. When budgets tighten, shoppers flock to Walmart for its unbeatable prices and wide selection, helping the company weather downturns better than most. Whether the economy is booming or struggling, Walmart delivers consistent performance. Its steady growth, reliable earnings, and strong cash flow make it a favorite among long-term investors. The main risk, staying ahead in e-commerce and fending off competition. Rivals like Amazon are relentless, and the retail landscape is always evolving, so Walmart must keep innovating to maintain its edge. But Walmart's track record of adaptation is impressive. Under CEO 𝗗𝗟𝗏, the company has embraced change, invested in technology, and fostered a culture of innovation that keeps it ahead of the curve. Management is proactive, investing in growth areas and not afraid to make big moves. From international expansion to digital transformation, Walmart's leadership is always looking for the next opportunity. Walmart combines stability, growth, and a reasonable dividend, a blue chip you can own for decades. It's a stock that offers both peace of mind and the potential for steady returns, year after year. In a world of uncertainty, Walmart's reliability is hard to beat. For investors seeking a company that can weather any storm and continue to grow, Walmart stands tall as the unstoppable retail colossus. There you have it. 5 companies I believe are fantastic long-term buys: Nike, Reddit, Intel, IBM, and Walmart. Each has a powerful moat, clear growth path, and resilience for market ups and downs. Building wealth is a marathon, and these businesses can help you go the distance. Want more in-depth analysis and exclusive stock tips? Join the Stocks Galore Patreon, link in the description. Now, which of these 5 stocks are you most bullish on for the next 5 years, and why? Drop your answer in the comments. I read everyone. Don't forget to like, comment, and subscribe for more investing insights. Thanks for watching. See you in the next one.